Devang Mehta, Director Equity Advisory with Spark Private Wealth joins us. Devang, good to have you back. Thank you for joining us. You're looking different today to me, are you?
Change the specs, Nikunj. Thanks for noting that.
I can see a lot of other things have changed, right?
It's probably back with a bang, and then so a bit of a happy face, I guess.
But even the bulls are back. Are they here to stay? What's your sense? You think it just a bounce in a from March oversold levels, or markets have gone through their so-called corrective phase already?
So a very good question, Nikunj. I think what we have been noting and marking since last September, to be very precise, is that September, October, November, December, Jan, Feb, all these 6 months we had a sort of a bit of loss of momentum where markets corrected. Right, the large caps corrected a bit, mid caps and small caps corrected by little larger quantum. March the fall was a little severe, and by severe I don't mean that of 15-20% type of fall on the index levels. Yes, a lot of stocks corrected by 10, 15, 20, 25, 30% also, mid and small caps particularly. But the sense one gets here is that at any point in this last 7 months, there has always been a backup buying which has just come up, be it the domestic investors, be it the HNIs, ultra HNIs, family offices. I think there is a lot more appetite for equities, and I know I'll sound cliche when I talk about this, but still you saw a couple of months of even positive FII flows in Feb and March, plus this domestic liquidity, which was so-called, I think mid caps and small caps were already overheated. There was a bit of valuation correction, price correction that happened, which I think was a little healthier because money making was getting a lot easier. So to answer your question, I think that corrective phase where people were scared that this is the end of the rally, probably there'll be a lot more bear market type of behavior that would come into mid small. I don't feel that is the right case in point. I think earnings season is again going to start. There is a lot more appetite. There's a lot more liquidity and sentiment that has returned back to the market. So I'm not feeling bearish at all. I think it's probably the start, or somewhere down the line will be start of a pre-election rally as well.
Pre-election rally is still due. I mean, do you think that there is still some more left in terms of the market rally or recovery?
I think yes, probably as you may say, we are almost on the Nifty and the Sensex. We are touching all-time highs, very close to that at least. And on the mid-cap, small-cap, yes, we'll be a little far away from that. But most of the businesses that I'm seeing have sort of either bounced back. Plus, you look at a bit of macros. If I can mention, yesterday the PMI data, the HSBC manufacturing PMI also came at around a 12-year, 13-year high, 16-year high to be precise, and a 33 straight month of positive data points. So I feel the manufacturing, the capex, even the discretionary upper end luxury consumption, all these data points, the GST collection numbers are sort of proving a point, and also global markets have been a bit supportive. So I don't see a major carnage. Yes, there has to be certain Six Sigma event which can come in and sort of the market view that sort of I'm trying to give. Otherwise, I don't think there's a huge correction waiting to be on the cards.
Okay. Bajaj Auto 9075. We've got a little bit of profit booking which has kicked in autos already, and that I think is a function of A, the recent rise, and B, auto demand. Bajaj is down, TVS is down, Hero Motor is also down. Naresh, this has been in performing sector, at least the two-wheelers. Is this a decent enough correction in two-wheelers where you should again re-enter them?
Not really. So we've not seen much of a correction in Bajaj Auto from a high of say 9,300. The stock's not even fallen 5% as of now. Similarly, if you were to look at a TVS Motors, the stock has from the top corrected less than 10%, and we recovered back also. So even now the stock is 5-6% away from a top. So out here the moves have been 100% after the breakout. So the only spot where there has not been a similar large move is Hero MotoCorp. So that's a stock that would look interesting on dips even in the current fall in terms of two-wheelers. So that would be a buy around 4,400, 4,500, and that could outperform going forward. So out of the auto pack, as of now, the contra bid is to look at something like an Ashok Leyland, which has gone nowhere, and on dips Maruti, which has been a trending one.
Space which is actually holding out very well today is the entire hotels pack. Just bring up what IHCL has been up to, because that I think has made a fresh record high for itself. EIH is the other one which should just come up for you on your screens. That's Indian Hotels, 615 in trade. Right now it's eased off a little bit, I think, from the top of the day. EIH, Chalet, Lemon Tree, the entire pack should come up for you on your screens right now. Even Asami Hotels, not all of them are holding out well. Lemon Tree, of course, is perked up quite nicely, about a 3.5% uptick coming in there, and then a 1% move coming in on Sami Hotels as well. Suresh, any of these charts looking tradable, something that you could buy even at these levels?
So out of the hotel pack, two names which still look interesting. One is Lemon Tree Hotels, which has not gone up massively. The stock has consolidated between 125 to 145. So once that breaks out, we could see a much bigger move. And the stock used to be 125 back in September. So 6 months of almost no major move. That is one. Second is Royal Orchid Hotels, which is again been sideways for the last almost 1 year. It topped out around 380 back in May of last year. And today also it quotes at around 380 to 400. So that's a stock which could see a further move. So we've seen a massive move happened in Indian Hotels and EIH. So they are out of the list now. But ROH could be the next one.
Okay, point taken. In the meantime, the market has come off a bit. In fact, from those 22,500 levels, there has been a bit of a sell-off in the last 20-30 minutes or so. It's actually moved into the red. What's holding out is Shriram Finance in this kind of market. Remember, there were reports doing around that Warburg Pincus is invested in one of those subsidiaries which the company is looking at divest as well. So that stock is in focus on account of that. But Nestle India is coming under pressure, 2.5% lower. I think one of the brokerages, MK, I believe, had initiated coverage with the reduced rating. So maybe that is having an impact. But what's the view on Shriram Finance, Nuresh, and the other NBFCs, if anything, makes it to your list? Maybe Bajaj Finance?
So Shriram Finance is interesting. The stock in the last 2 months has made tops around 2500, 2530, almost 4 to 5 times. Today, the stock crossed above those levels. So out there, the structure is positive, wherein it could eventually go towards 2800 to 2900 levels. So that's the first one. The next one would be Mahindra and Mahindra Finance, which has been sideways. Has made multiple tops around 300 to 310 over the last 6 to 8 months. If that crosses it, sustains about 300, 310, that would be a strong breakout. It has made a quick recovery from 260 to 300 in the last 6-7 sessions. So these are the two names I'll watch out for.
Right. Okay, let me quickly take it across to Ansh as well, find out what are the big buggers in trade right now in terms of volume as well as price action. Ansh?
Right, so Hindustan Zinc will be the first stock in focus, as stock has given a breakout from its horizontal resistance zone along with good volume of over 7 times its average trading volume of last 10 sessions, indicating strong participation in today's move. Along with this, aluminium will also be in focus. As you can see in the chart, the stock has given a break from its upward sloping resistance trend line, touching the record high level as well, along with good volume of over 2 times its 10 session average volume. Lastly, Tata Elxsi will be in focus, as the stock has given a breakout from its consolidation pattern, which was intact from last 2 months, surpassing above its 200-day moving average. Also, the breakout is backed by good volumes of over 5 times its average trading volume of 5 sessions, indicating good participation. So these are the breakout stocks based on price volume action.
Some of the stocks, yes, big green bars as far as Elxsi and Hindustan Zinc is concerned. So some of those names definitely outperforming in the last few minutes. From the broader markets, Capri Global is up around 17%. Cera Sanitary Ware is up 13%. Infibeam Avenues has seen a good move. Greenlam Industries as well. In fact, Cement Pack as well was perking up yesterday, Devang, on these reports. Probably there's a price hike possibility. Real estate has been doing well. Do you think it's a better way to play the real estate cycle through the building materials, whether cement, durables or other building materials?
I think, yes, very clearly we have been proponents of this proxy play across a lot of sectors. And yes, I'm seeing this in India, probably your building material or home improvement. The theme is more consumption based rather than considering it cyclical. Cement can be a bit of cyclicals because it is affected both by real estate demand as well as infrastructure. But home improvement goes on continuing as we go up in terms of consumption. But yes, to be fair, I think a lot of these paint companies are facing a lot of competition. A lot of these adhesive companies are also facing competition. But in the wake of that, There has been this fast-moving electrical good companies like Havells, Polycab, just giving certain examples, which have done extremely well. There's a company in Serra Sanitary Ware, right? These are also sort of proxy plays to play the real estate cycle, which is doing very well. I think yes, this is actually an interesting theme along with cement and sort of this type of home improvement as a theme, which also has probably cement has done, but most of these businesses are somewhere far away from their lifetime highs. So I think there's still a lot of scope for these businesses to do very well as we into this new year and we see capex as well as discretionary consumption moving up.
Right, okay, that's the take coming in on where some of the sectors are headed. Just closing in on trade, and still it's Laurus Labs which is holding up well. PNB has, by the way, shot up. If we can just bring up the intraday graph of that stock, because that's really on a tear, and the perk up has really come in just the last 1 hour or so. 7.25% of an up move coming in on the futures. There's Manappuram, which is looking very smart indeed, and then GNFC as well, which has made quite a decent move. Naresh, just scout the charts for PNB. This is a sudden shoot up that you're seeing on the stock.
Yeah, so, sharp turn in momentum across the PSU banking space. If we look at PNB, the last high for the stock was 133 to 133.50. That was the high it made, and that is being taken out right now. We are at 135 levels. Similarly, Canara Bank has also crossed above the levels of 600, 602. So it's a fresh breakout move across the PSU banking space. At current levels, the Bank of India, Canara Bank still look interesting. PNB would wait for a dip, but the breakout was clear across the board.
The word coming in on PNB and some of these other public sector banks, which are clearly doing quite well despite the market coming off a bit. But IT too has been one pack. Devang, what's the view? Given the low expectations, what's the probability that the IT companies might surprise with their earnings come next week?
I think, yes, the last quarterly numbers which we saw had a bit of green shoots, not only in terms of numbers and guidance, but also the management was more sort of forthright in saying that worst seemed to be over. And I think given the valuations of these stocks which had come out from, say, 40, 35, 40 types of P to most of these companies coming under sub 20. Now, of course, the valuations have sort of again started to rise. I think both the large cap IT companies and mid cap IT companies are good choices if somebody probably has at least 2.5 year horizon, because we seem to see that a lot of this US and European nations are sort of coming out of the woods for some reason. I think we also seen the data points across these economies at least improving a tad bit. My sense is that these are sort of contra bias, though we are more, as I said, we favor more of domestic plays or more of the local economy facing plays. But these are good themes. Some IT companies, some pharma companies. We have seen also mid-cap IT coming to the fore. A lot of ER&D companies, a lot of tech companies, and a lot of Indian IT companies, also sort of mid-cap IT companies have come back to the fore. So I think it's interesting. Yes, results we will monitor a little more closely and take a proper structural trend. But yes, somebody wishing to be here for 1.5 to 2 years seems to be a good sector to sort of get into.
Vistara, that's where all the action has been. And the CEO, Vinod Khanna, today, along with the HR personnel and other senior officials, virtually met all the pilots regarding the issue of compensation. Remember, since the start of this week, nearly 100 flights have already been cancelled because of the absence of pilots and other crew-related issues. Let me take it across to my colleague Sumit Chaturvedi and take stock of what exactly happened in that meeting.
With the trouble continuing for owned Vistara Airlines, its CEO Vinod Khanna today met the pilots in the afternoon. The talks were centered around the concerns of the pilots. Well, the salary structure was not discussed in detail. Sources tell us that roster and network planning was discussed in detail. Airline management told pilots the issues from the last few days are coming because the pilots are spread very thin, and rostering issues will be taken care of. There are concerns about the roster of pilots. That was something which was discussed. Salary was not taken up in that big a manner as was expected. We all know that Air India is impending a merger with Vistara. Both the Tata Group owned airlines, and some of the pilots had reported sick. So Vistara said that the flights have been affected because of unavailability of crew. The flights were affected from the last many days, 50 to 60 flights per day. But today, the number of flights impacted has come down. Yesterday, Civil Aviation Ministry and DGCA also stepped into the whole issue and tried to or work in favor of customers, asking Vistara what are they doing so that there's a minimum inconvenience caused to customers. But in the whole thing, now today's meeting is quite important because airline management has tried to address the concerns of pilots today.
Okay, so that's about Vistara, but in the meantime, let's take the BTSC trades as well from our chartist. Kunal, you go first.
So I'll select two buy calls. The first one is about Poonawalla FinCorp. That's a chart which is starting to look very attractive, coming out of a bullish pennant formation on the daily time frame. So buy with a target of 540, stop loss at 470. And Granules is something which is also coming up in terms of a breakout mode. So would suggest a buy targets of 470, stop loss remains at 433.
Yeah, Granules, Loris, a couple of these actually pharma names are perking up on the radar. But Naresh, what about you? What are the BTSC or STBT trades?
So two banking names, one small cap Bank of India, which has seen good momentum today, could see follow up tomorrow. Stop loss at 141, target price of 148 to 150. Second is a buy on Axis Bank, which has shown a reversal candle today. Stop loss at 1055, target price of 1100.
That's really, Okay. Devang, just before we let you go, just wanted to understand what is it that your preferences are within the large cap universe, other than the stocks and sectors that you've talked about.
I think yes, on the large cap side, we clearly favor, as I said, the luxury, the discretionary consumption side, where you were talking about hotels, and I was sort of ready to go on hotels. We sort of like this sector, particularly companies like Indian Hotels, companies like EIH. Now the average room rates for most of the companies have sort of gone up. The operational efficiencies have come to the fore. Operating leverage has come to the fore. Very importantly, most of these companies now operate on a model where they manage these hotels rather than doing a lot of expansion on the capex front. So debt for most of these companies have also come down. I think clearly the religious tourism, the inbound tourism that India is right now seeing, the activities in terms of even convention centers being set up across cities will boost this. The demand is clearly growing more than the supply. And I think that demand-supply mismatch will continue for some time to come. So I think this as an industry, a couple of large and couple of mid caps, we sort of
Let you go on that note. Thanks as always for taking the time.
If you like this video, then like, share and subscribe to ET Now.